Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 20th of November. I'm Daniel Lam, your host for the podcast. After some uncertain times in the second quarter and the third quarter this year, Indian equities are once again enjoying positive momentum. It is true that, year to date, they have underperformed their global peers due to uninspiring earnings and expensive valuations, which led to significant foreign investor outflow at $16 billion year to date. However, the current earnings season indicates the bottoming out of the earnings cycle. Decisive policy support through the goods and services tax cut and income tax cut, alongside with front-loaded policy rate cuts and favorable liquidity conditions, are likely to trigger a consumption-led growth cycle with possible upgrades to EPS estimates in the coming quarters. The valuation premium versus Asia ex-Japan and EM peers has narrowed. Foreign investor positioning in Indian equities is currently low and light. Moreover, there's continued downside surprise in monthly inflation prints. October CPI inflation came in at 0.25% year over year, and average CPI inflation from April to October this year stood at 1.9%. A solid harvest is likely to keep food inflation in check in the coming months. Daily retail prices of cereal and edible oil continue to fall. Now, the impact of the GST cut is still filtering through to inflation prints. The GST cut became effective at the end of September, and further impact from the cut is likely to come clearer over the next few months. The headline CPI could drop by 50 basis points, assuming that 50% of the GST cut is passed on. So this combination of a bottoming out in earnings and an improving inflation picture bode well for Indian equities to be entering a Goldilocks stage. The Nifty index is currently at the resistance level. It may pull back to the 25,400 and to 24,600 levels. Those would be strong level of support and potential good adding opportunities. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.